The fear and greed index tells me it's time to buy, accumulate more. The smart money and the whales want more crypto at Walmart price. So you should buy more now. Of course, this is not financial advice, so buy more crypto right now if you can afford to buy some top coins. What's up, guys? Welcome back to another video. So the fear and greed index is chilling at 27, usually a solid buying indicator. Just a little food for thought there, not financial advice, of course. We're going to jump into AMP today, trading at 4.8, 0.048 cents, ranked 68 with a 2.3 billion market cap. Over the 30 days, we are down 10%, but we've taken a nice little bounce of 5% over the last few hours. So let's have a little look, shall we? So what I'm seeing at the moment, really, for AMP is, of course, we had these massive thrill highs, so we've still corrected quite a lot from there to now. We're down 60%, but we are putting these lower highs in each time, which is quite important, really. As you can see, each time we do put in these lowers on the daily, we are also oversold on the RSI each time. Oversold here. We weren't oversold here, however, but each time we are oversold, usually we get that spring. Of course, we were overbought over here, overbought up here. So it just makes me think, do we have more time to come down? Are we going to come down to these key undervaluation reaccumulation ranges over around 0.042, 0.028, which I do have my eyes on? So we are currently trading in this falling wedge pattern. We don't know if we're going to break out to the upside, but what we do know is we found a lot of support through this triangle and this converging lines telling us that we're either going to break to the upside or the downside. We also are backed up by a lot of support with this wick right here at 0.046. We can see the RSI is creeping up. We're putting through higher lows and also lower highs. So potentially we're going to get a spring at some point soon. If we were to measure on the Fibonacci retracement as well, this swing low to high, we've just come under the 0.786 Fibonacci, which is quite interesting to see, and we're yet to break through the 20-day moving average on the 4-hour time frame. In the 30-minute, it's just looking a bit messy. There's too much noise here, not very easy to really analyze. But if we come back out to the the daily time frame, it makes you wonder, is it time to now come up? Because every time we get the low, the high, the low, the high, the low, the high, the low, the high, the low. So do we have much more space to really come down? If we really do lose this support and come through to these levels of 0.03, then this could be very big indicators of bear markets. We've got significant support around 0.028. If we do fall below this level, we basically come down to 0.007 because we have nothing here and here in between. So these are just some key levels to really look out for. Quite scary, but I think, this falling wedge, given the level of support that we do have, I think we might get a nice break to the upside. And should that happen using our Fibonacci extension tool, we should come up to around these wonderful price levels. Looking at 0.52, 0.62, and on our golden fib a 0.65 if we can break out and come through the next resistance levels here, here, and here. So that's kind of the short-term goal for AMP. I want to see the confirmation to the upside. I want to see the breakout out of this falling wedge. It'd be very, very good to see. But also bear in mind that if we lose support here at 0.046, we may come down to this accumulation zone at 0.041 and also down to 0.028. So hold your horses for now, guys. Not financial advice, but that is what I see on AMP. Just take your time and don't rush in. So if you like the video, subscribe and see you in the next one.